Welcome to Investors Insight, where today's topic is stubborn markets. Ty and I have a lot to talk about. And before Ty gets into the details about consumer and inflation, I want to talk about the current market choppiness. So major market indexes ended lower for the third straight week as the 10-year Treasury yield remained near a 16-year high. And that's due to investors believing that the Fed will maintain a hawkish stance even with declining inflation. So you can see in this performance chart of most stock and bond indexes from last week and for the past month on the right side there. You can see the top line that shows the S&P 500 was down 2.11% last week and is down 4.06% in the past month. And a lot of red on this chart as the market has had trouble with mixed corporate earnings and higher yields. But I do want to point out the only green in the chart is energy and healthcare, which are two sectors that we have liked for some time and continue to allocate funds into. And so, we did get some good news on retail earnings and a strong consumer that Ty is going to talk about. But good reports were followed immediately by a cloudy outlook, again, due to rising rates. The bottom line is until yields stabilize and we get better clarity from the Federal Reserve, it will remain a choppy market. Another headwind that the market is facing is seasonality. As you can see in the second chart here, going back to 1950, the months of August and September have been two of the most challenging for the markets. The dark blue line shows average return. As you can see on the average return for August has been flat, and the average return for September has actually been down 0.7%. So higher yields and seasonality can be blamed for the current market choppiness. But Ty, we did get a good report on the consumer, but also inflation is kind of being stubborn here. So talk about that.
Yeah, I mean, I think the first place to start is, a lot of clients call in and they want to know why is the Fed being so stubborn, leaving rates elevated like this. We coming up on a rate decision here in September. The expectation right now is to just pause, no cut in the foreseeable future. And a lot of people are, wondering when is the Fed going to cut? With the consumer data that we just got here on top of, wage growth, the job market, the housing market, there's still a lot of elements out there that the Fed's looking at that is, letting them pause and making them a little hesitant to cut. And so the consumer data I'm talking about is we got retail sales rose 0.7% for the month, which is very strong for a month. That was boosted by Amazon Prime Day that we had back in July there. And so these numbers come out a little dated. They come out about a month after, but in July we had Amazon Prime Day. So retail sales were very strong on top of, as I mentioned, the job market, the housing market. And then when you get to that point, what the Fed's looking at is that inflation over its history tends to come in waves. And so by that, I mean, usually inflation doesn't come down. We've come from 9% to 3%. Doesn't usually mean that's the end. Historically, there's only been like a 13% occurrence that there was only one wave of price surges. So we went up to 9%, down to 3%. Only 13% of the time do we not see, another wave there. And so the Fed is looking at all these numbers and saying, wow, we may have another wave of inflation coming on. And that, on average, starts about 30 months after the first peak. So, about 2.5 years. And as you can see in this chart here, this is the 1910s, 1940s, 1970s. You can kind of see how we have that, element of a wave there before we elevate the second time and then finally come down for good. So that's something that the Fed's keeping an eye on. And that's why, inflation's being stubborn and the Fed is being stubborn.
Yeah, and that's the key here. Until we get clarity from the Fed, the markets will remain stubborn and choppy. So if you have any questions about this choppiness of the markets, please let us know. We love to talk to you. Call us, email us, but we hope everyone has a great week. Thanks for watching.